Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain Crypto Update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is January 2nd, and today is technically the second day of the trading year for crypto, but U.S. markets have not opened up yet. They open up officially tomorrow morning at 9:30 Eastern, and futures will open up this evening, I believe, around 6 or 8 p.m. Eastern, and that goes for both the U.S. dollar index as well as equities and several other assets as well. And if it's any indication as to how crypto is acting, then we may open up for equities and traditional risk markets. But of course, we still have several hours left in today's trading day, and we of course have a whirlwind of things to digest throughout 2023 before we can make any solid inferences on bull versus bear. But I will say the price action overnight and into this morning, definitely very positive, something that we've been mentioning for quite some time with the lack of bearish volatility and some of these catches, especially at the 16,550 level, where we hovered around for pretty much more than half of last week, as well as solidly catching on the 16.3 level, which we did not revisit, and we ended up forming a bit of a inverse head and shoulders down here on the 1 hour from Wednesday, Friday, all the way into Saturday. And of course, Sunday, we have been on a trajectory since very early Sunday morning. So just looking at the Bitcoin chart very quickly, without any other context, of course, we don't have equities. So we're just really looking at crypto today. We can see that the 16.7 level, very, very solid level. We need to stay above that to then get above 16.8. So if you can stay above 16.7, see how it's catching here. It actually dropped down to the VWAP and the 200-day moving average, quickly rejected. So, potential little swing failure pattern here beneath 16.7 and 16.8, which seems to be our new range. Hold 16.7, get up to 16.8. Then you got to flip that into support to then head higher towards 16.9. And if you can head towards 16.9, flip that to head higher, and we'll take a look at what the higher time frames look like in a second. But right now, critical level 16.7, also critical level 16.8. If you can get above 16.8, there's a lot of momentum to be had if you can cleanly get above there without any issues. So definitely something to look out for there. We have this POC here, so I'm expecting some volatility in here. Will we break it first, or will we break it immediately, I should say? Unlikely, given previous price action. We've been very volatile within these ranges. So if I were to guess, maybe we poke up one more higher and then we head back a little bit lower, one more bounce, and then try again. But of course, momentum can do funny things in the markets and can bring us straight up to that 16.8 level. And I think that's this 16.785, 16.8, very critical for continuation. Looking at Ethereum, just looking at a little bit similar, but the levels are of course slightly different. For Ethereum, the level you really need to break, well, getting above 1220 is one very solid start. As you can see, a lot of range trading in that 1220 area. Getting above 1220 will definitely allow you to get a bit of a boost up to 1230, and very similar to that 16.8 level for Bitcoin. 1230 is your kind of momentum line for Ethereum. Get above 1230 and you have a pretty good chance to strike high and get up to 1250 or potentially higher. Quickly looking at sentiment, we can see Bitcoin daily sentiment picking back up, near that low 60 level. It's at 66 currently. The highest was 64 previously. So positive to see it above the previous, resistance in terms of sentiment. We want to see that continue. Ethereum, definitely a little bit odd, considering the price moves. We did have that big boost in sentiment over the weekend, but slowly started to wane into today and yesterday. It does seem like Bitcoin sentiment is really kind of the core driver and a better metric. So we'll probably be closely following that. We've seen a lot of, interesting action in relation to sentiment. It's been, obviously trying to pick back up you know, at certain levels, and traders are definitely feeling this is way more green than we've seen on the sentiment chart in weeks, you know, potentially months, to be honest with you. So definitely a good sign here that we're seeing more and more bullish sentiment. We've actually got more green on the board than we do red for once. So preliminarily, definitely a good sign. So zooming out on Bitcoin, we're going to head to the 4-hour here. It's going to look a little gross. I know I got a lot of lines. That's because, and I've talked about this many times, look at how tight our trading ranges have been. You know, so very tough to get rid of these lines. But, you know, let's say above 16.8. So let's just kind of use 16.8 as, you know, our lily pad. If we can get above 16.8, then you've got 16.9 and 17K, or 16, yeah, 69 and 17K. I would say 16.9 is a bit more important. It lines up with top of resistance for where we traded mid-December, as well as low end resistance for where we traded very early December. So 16.9, very critical level if you can get above 16.8. 16.8 is a great lily pad because it brings us back into this range that we traded in, which we could end up getting stuck in for multiple days. Again, that's completely plausible. But if you can get above 16.8, then you have a chance to at least range between 16.8, 16.9, form a potential bull flag or consolidate and move higher. If you can get above 16.9, then you have, you know, really good. There's a pretty large gap here. You've of course got a lot of trading here from the beginning of December, but there's obviously, you know, a nice little kind of trading gap or liquidity gap here, in compared to how we traded mid-December, and how the fact that we sliced through this level, then we're basically acted as resistance from them. So if we can get above this level, you know, and into 17.1, then your momentum, your odds for momentum greatly increase, because you're getting through this very tough level of liquidity, and now you're up to 17.1, which is, you know, a little bit less difficulty of trading. And you can see how we shot up through this level before, after trading lows late December or late November. So if you can get above 17.1, then you've of course got 17.3, and then 17.3, you know, large gap in liquidity here that can bring you all the way up to 1800 before ultimately getting cut down. And of course, you know, our RSI traders, you know, that, you know, when momentum really begins to carry something, you know, RSI goes out the window. So definitely I always bake RSI into my plan, and it's a great indicator, especially, you know, if you sold this move, you know, a first oversold touch, then, you know, what did you really miss out on? You know, you missed out on, you know, 2% more on a, you know, potentially a 4 to 5% move. So at the end of the day, you know, staying true to your RSI trends is a smart idea, but we're not officially oversold yet. We do seem to have momentum. We know our, you know, resistance 16.8, 16.9, 17.1, and then 17.3. If you get above 17.3, then you have causality for a big, or I'm sorry, my drawing tool was gone. Then you have causality for that big spike higher. Doesn't mean it's going to occur, but if you hit these levels, level to level, and you maintain these levels, then, you know, depending on how liquidity stacks up, where, you know, spot bids versus perp bids are coming in, then you have the chance for some momentum to push higher. I will say spot bid has been very strong since yesterday. We weren't seeing that throughout the weekend. It was actually a bit weak very early in the day yesterday, and it greatly picked up into the evening and into today's trading session, which is exactly what you want to see. Perps are moving things. It's likely to get cut down. BARTs, extreme volatility, nastiness. If spot is, you know, either leading or working with perps, then you have a stronger chance of momentum continuing, and of course potentially higher price action depending on where that momentum is moving. And right now, momentum does seem to be moving in the buy direction. We're seeing a lot of spot bid activity, as it's typically called, and you know, that is a very good sign for the markets. So zooming out on Ethereum, again, lots of lines. Going to try and clear this up a little bit. So we know that 1230 level is very critical. It's the top of the range that we've been trading in for pretty much mid-December. It was also supports back in early December, and, you know, and then we sliced right through it, you know, right around the 15th, 16th. So get above 1230, very solid sign, because it's acted as strong resistance, both, you know, late November, currently in December, and then it was support early December, late November. So Critical level, get above 1230, have a strong chance at 1250, get above 1250, 1280, get above 1280, 1310, get above 1310, maybe 1350. And of course, you can see very similar to Bitcoin. Once we got above 1280, strong momentum higher. Although it was cut, which I think, this is probably a very good trading range to consider for current days. If we get up to 12, if we get up to 1300, 1350, then we can talk about potentially breaking that level. But right now, very, very solid range here between 1350 and 1077, 1080. So since we didn't break lower, we still have a chance to, of course, if 1230, if we get cut at 1230, which is completely plausible. 4 hours starting to get a little extended. We don't have a whole lot of positive things lining up for us for the beginning of Q1, but a lot of people are liking the idea of a rally. So if we get above 1230, then you have 1250. Then you have 1280, 1310, 1350. These are our levels that I have a feeling that Ethereum will very much abide by if we continue higher. Now, if we get cut at 1230, you're probably headed back down to the low end of this range, which is 1190. And then you're either, sitting here and ranging, or you're dripping back towards 1150, potentially back towards the lows. We are sitting in the center of the trading range here. It's pretty much dead center. Pretty bad area for swing trades, typically, especially as you're nearing resistance of the dead center of the trading range. And without any real momentum or really any indicator. Of course, the main positive that we have is the spot bid is picking up, and buyers are seeming to like this level, but that doesn't mean they will forever, and that could, of course, just be a swing trade or day trade for them. So something that we have to continue to consider is our key support and resistance levels as we move throughout the chart. So 1230 is extremely critical. Get above 1230, you have a lot of room to roam as long as you can continue to get above those levels. Get rejected at 1230, you're definitely back down to 1200, potentially lower. And then we will have to continue to play the range game that we discussed earlier. Something to keep in mind is, of course, still this potential head and shoulders forming on Bitcoin. It's definitely getting a little bit elongated, but we can see that there's your neckline, and it's not exactly sexy, and you can probably still get to 16.9 for this to still be effective, but it's definitely losing luster, very similarly to our our trend system on DXY. These things are only valid for so long. Until you have to cut that idea and move on to the next one. So it's definitely still in play. We know 16.8 is at a critical level, and if you can get above 16.9, then I think that's where things will really have some fun for Bitcoin. But for now, continue to play it level by level. We are overextended on the hourly, but that doesn't mean we can't continue to move higher. We're getting overextended on the 4 hour. And of course, we still have DCG and Genesis woes. I don't know if anyone saw Barry's response to the Winklevoss twins tweet, but billionaires are sparring over bad loans, potentially bad loans, I should say. And of course, we still have earnings at the end of January. For the U.S. economic calendar this week, we of course have unemployment, which will be significant on Thursday. PMI and ISM manufacturing indexes will be relatively important as well. And then, of course, unemployment rate towards the end of the week. So we definitely will have some volatile things. I think unemployment rate is going to be the biggest factor of the week. That's obviously a key Fed indicator. So if this is bad, if this is bad, meaning higher, markets will actually go up because they want the unemployment rate to go higher. If the unemployment rate goes down, then so will likely markets, because the Fed wants to increase unemployment to take away from inflation. So very tricky levels, but we do know our critical areas. We are still range bound until we get a confirmed breakout, and we are within those ranges currently. Top of the range, 1230 for Ethereum. Bottom of the range, 1190 for Ethereum. Top of the range for Bitcoin is 16.9. Bottom of the range for Bitcoin is 16.5. So let's see how we react throughout the day. Potentially, what I look out for is always end of the day trading, which is typically around 4 or 5 p.m. Pacific. I believe it's around 4 p.m. Pacific now with the time change. So something to continue to look out for in terms of volatility. I will not be placing trades until we get a confirmed break of above 16.8 for me, or potentially back below 16.7, because below 16.7, potential short down to 16.5, above 16.8, potentially 16.9 or higher. So good luck, happy trading, and speak to everybody tomorrow.